Welcome to the Sykes & Company PA video blog featuring Ollin Sykes. You're at the NCPA convention this October talking about cash flow management tips for when money is tight. Can you tell us a little bit about what you'll be covering in that session?
Yes, on October 18th in the afternoon, I think we have an hour and a half session, Rachel, for the NCPA, dealing with cash flow management and what to do when money is tight and various solutions for pharmacies. And essentially, we're going to be talking about really three primary learning objectives. And the first one is what really you should look for and review your monthly balance sheets for your pharmacy to better manage your cash flow. We're going to be walking through the processes that we go through here in doing that, which includes the point of sale, the third party review, the inventory information, fixed assets, debt structure, equity, distributions. We're also going to talk about the section of the script dispensing summaries for the day, week, and month, and why they're so important to a pharmacist, because so many don't really have time to really get involved with that and to understand what's there. And of course, once we pretty much cover those broad topics, we're going to talk about the relationship that the balance sheet and the income statement have and how it affects the short and long-term opportunities for a pharmacy, and talk about some of the key financial metrics, why they're important, what are things they need to be looking for with respect to that in terms of liquidity, activity, profitability, and capital structure ratios. Then essentially focusing on all factors that you can use to better understand your pharmacy on a monthly basis. And we really just talk about the key issues that we'll be talking about during the course of this conversation. And we're focusing on some of the balance sheet matters, of course, the cash, third-party receivables, the inventory matters, the counts, the actual counts there, perpetual inventory systems, the payable structure, payable systems, the gross margins, and why they're so critical to pharmacists, and obviously payroll expense, which is probably the single most important number on the P&L outside of gross margins. But that's just a quick precursor of some of the things we'll be talking about on the I think it's 1:30 Central Time on October the 18th at the convention.
So, Ollin, you work with an awful lot of independent pharmacy owners, and many of them, I think, have never worked with an accountant who really focuses on that industry. What are people most surprised about when you start walking them through these kinds of numbers you're going to be talking about?
Well, probably the thing that surprises pharmacists the most is that they don't have a clue what we're talking about, in that no one has ever taken the time to share with them or either has the knowledge base that pertains to the niche of independent community pharmacy, in understanding the fact that fundamentally we view having basic fundamental financial information is so critical daily, weekly, and monthly. Because if they don't have a system in place to capture that information and report it, they completely lose track of what is happening. They get so tied up in the day-to-day functions of being a pharmacist and taking care of their patients that they miss kind of the big picture. And that's probably the number one thing we're involved with, is that we'll get a call and they'll say, I have a CPA, but I'm his only pharmacist client, or he has two clients, or whatever the case may be, whereas frankly we have hundreds that we deal with daily, because this is all we essentially do. So we have the ability to see so much data, so much information, see those that are real winners versus the ones that are having tremendous cash flow issues, and that is the single issue that we're dealing with most on a daily basis, and that being the lack of cash flow and the reasons for that. But those are things that we typically run into, Rachel.
Can you give me a sense of maybe one or two scenarios that lead to that lack of cash flow?
Well, the number one thing this year versus last year is the impact that Obamacare and some of the pharmacy benefit managers of the PBMs have had on reimbursement rates. Most pharmacists don't understand there's about a 3 to 6% differential year to date, 14 versus 13, with respect to their gross margins. So if you're a typical pharmacy in this country doing about 4 million plus or minus, 4% is six figures, close to it or more. 5% of 4 million is 200,000. So it's a huge drop this year in terms of gross margins. So it makes being profitable, making sure you understand where you are, making sure you know where your inventory levels are, so critical to monitoring your numbers and preparing for year end.
And how easy is it once pharmacists understand these numbers to kind of get on top of their cash flow? I mean, it sounds to me like if payroll's a big part of it, that you can't play with as much. But how much freedom do they have about cash once you've walked them through this?
Well, they have a certain amount of flexibility in that usually the culprits outside of gross margin is that payroll area, direct payroll. And we like to say direct payroll needs to be about 10.5, 11% of gross accrued revenue for a pharmacy without taking into consideration payroll taxes and benefits. The NCPA stats are slightly higher than that because they're loaded with some of the benefits features. But we like to take the raw gross payroll numbers and say we really don't want to see that in excess of 11% and preferably less than that. Frankly, our most profitable pharmacies are operating really less than 10%, some cases substantially less than 10% of gross revenue. So those are the items that have the most impact outside of gross margin because so many of the other operating expenses outside of payroll and payroll-related benefits and taxes, payroll taxes that is, are really fixed and they're small in relation to those numbers.
And if I am coming to the NCPA convention and I plan to attend your talk, but I need something I can do right now to kind of start to get a handle on my cash flow, is there anything I can do in the next month and a half?
Yeah, you can make sure you understand exactly where you stand. You can make sure that you've got an actual inventory that's been taken as of late. Don't wait until December to do that. Let me repeat, do not wait till December 31st to know what your inventory is. You're going to get inventory shock and P&L shock. You need to do that now. Go ahead and make the adjustments. There's a whole host of other things you can do with respect to fine-tuning that, including making sure you have perpetual inventory systems in place. We're working towards that with respect to technology that is out there, both in the cloud and in the back of the pharmacies with their script systems. So there's a whole lot of options and availability of tools that you have to prepare yourself for the pre-planning and for the year-end process to come.
And if I'm a little bit intimidated by all the topics that you mentioned that you'll cover, you're going to explain this for the non-accountant, right?
We try to put it in terms for pharmacists where they can understand it because, as I tell them, we don't fill scripts. You don't need to be doing accounting.
Thank you for joining us today. If you want more information or have any questions, please feel free to contact Ollin directly.